All right, folks, bear with me. I'll be getting started here in about 2 minutes. Get started in about 2 minutes. All right, folks, good evening. Tim Davis from the Bullish Bears team. And this video will be my weekly weekend market review where I look at the markets by diving a little deeper and looking at the charts, diving into some longer term charts, looking underneath the surface and taking a look at the technical analysis and share with you guys what the charts are showing us. I'll be showing multiple charts, multiple time frames, so we can take a look at what's happening now, what we possibly can expect in the near term, and what we possibly can expect further out. I think I'm also sharing this here live on YouTube. Now, for those of you guys who join me on YouTube, welcome. And I am one of the team members here, actually one of the founders of the Bullish Bears team. I'm not that technically inclined, so if you are writing questions in the YouTube chat, I will have to look at them after I finish this video until I can figure out what's going on my computer screen. But other than that, we'll dive right into it. And as I start every weekend, this is how I like to start. Here's my full disclaimer. And if you guys hear any background noise, I am not home alone. I got a dog right here. Some folks in the kitchen doing some things. So we're going to go right through this pretty quick. The charts speak for themselves on this past week or so. But again, dive right into this. Here's my full disclaimer. I am not a financial advisor. I'm not a stock guru. I don't have a crystal ball, so I cannot predict the future. No one can. They only offer possibilities or probabilities. No one is perfect. Therefore, no one is 100% correct 100% of the time. I am a longer-term momentum trader looking for possible momentum built up in one direction or the other, coupled with a little unusual option activity. Remember, the trend is your friend. Take a little from everyone and develop a method that works for you. I'm always looking to limit my risks, so don't bet it all on what you cannot or don't want to risk. And remember, this is trading, not investing. So seek a financial advisor or investment firm for investing advice. With that said, I'll dive right into this. And for those guys who are members and you guys have access to the Discord, if you can hear me loud and clear, just type me a little message. I already heard back from Cookie. If anybody else is there, you can hear me loud and clear, and you can see my screen. Just type me a message and let me know that you can hear me loud and clear and you can see my screen. Awesome, thank you. And let me resume recording as well so folks can catch this on the replay. All right, folks, I'm gonna start off showing the screen. While I'm showing the screen, I'm gonna let you guys know what this is. Most of you guys know I show this almost every week. And what this pretty much is a tool that I use to track the overall market breadth or the overall ability for stocks within the S&P to participate in the rally if there's a rally. And before I dive right into this is a daily chart of the percentage of S&P 500 companies that are trading above their 200-day moving average. Speaking with a friend early this morning, and he told me that him and his wife just came back from the doctors and they had to take their child, who I think is 9 years old, to a local clinic and found out that their child is suffering with COVID. And more than likely, he said he believed it happened in school. And talked to a cousin last week, a real close cousin of mine, was more like a sister. And by the way, my friend, him and his wife are now quarantined at home for over a week, and they're both working folks. Talked to a cousin last week, we're real close, more like brothers and sisters. She too, her two sons, one's 13, one's 9, both contracted COVID over the past week. I live down here in Maryland. A lot of the schools here are starting to get a lot of these pop-up cases everywhere. Say that to say that the problems that we're facing as far as COVID are not gone, and they probably won't go away. We'll probably continue to have these issues for a while, even with so many breakthrough trials and stuff that are coming through. We're still going to have these issues probably for a little while longer. Not on top of that, there's a lot of things that are affecting our global economy at large. Look at the U.S. government. They're going through a lot of things right now as far as this debt ceiling. Take a look at this supply versus demand, folks. You get a chance to Google supply versus demand issues globally, and you'll see a lot of articles that are starting to pop up about the supply versus demand issues across the globe, which is going to continue to affect the overall economy and will continue to bleed over into the stock market as well. If you don't believe me, just Google supply versus demand. You'll see the various companies, you know what I'm saying, and the various supply chains that are being affected worldwide. Just saw an article on Apple, how they were struggling trying to keep up with the demand of the iPhones because it's just hard to get certain supplies. My son works at a local print shop, which does a lot of photo printing and banners and advertisement signs, things of that nature. This company is normally a pretty busy company around this time of year. And he said the management staff told them that things are not as busy as they normally are this time of year because they are suffering with supply issues. They can't get supply. So it's happening everywhere. And I don't think that problem is going to let up anytime soon. Another friend I talked to, his daughter works at a Chrysler plant somewhere in the U.S. And a lot of them are back to work and then off work again because of supply issues. So, and also, not only have they had supply issues at this particular plant, but they also had, every now and then they have COVID outbreaks and they have to shut down. So when that happens, what happens is when these companies start getting these supplies out, eventually they pass on the prices in order for them to be able to stay in business and keep things afloat. Shipping container prices are going up. It costs more to ship things, a lot more nowadays. And what happens is most companies passes the burden of that down to the consumer. So prices of goods and services continue to rise. You go on a store, you see a pack of chicken wings. I went to store last week, and the prices were double. Look at oil prices are on a rise. So that's another sign of inflation. So there's a lot of things that are going to affect our economy and our global supply chain worldwide, and it may, be with us a lot longer than what people expected. Now, looking at this particular chart, and as I gave you guys that little tidbit of news. So here's a chart of the S&P 500 stocks trading above their 200-day moving average. This is a daily chart of this tool. Back in April, we was as high as 97%. So 97% of S&P 500 companies were above their 200-day moving average back in April of this year. And the blue line you see on my screen is a 50-day exponential moving average. I like to keep on this particular chart. On all the charts that I don't use, I try to use a clean chart just showing the 50-day moving average and show you guys how price action or percentages in this case are moving according to the exponential moving average. And as you see, we fell below the exponential moving average back in early part of May. And since then, we've been trending below that moving average, and it has been used, it has became an area of resistance. Every time we gap down, we travel back up to the percentages, travel back up to that moving average, and gets rejected. And that has been happening since May. So now we're probably starting to challenge. If I was to put the 200-day on there, we're probably starting to challenge. If not, I've already fallen below it. As of Friday, we closed at around 65%. So 65% of S&P 500 stocks as of Friday, we're now trading below that 200-day moving average. That's what the daily chart looks like. And then we glance over to a monthly chart. For those who've been following me for a while, I've really been keeping a track of this action. Now, maybe a short-term positive is that on Friday, the market pretty much did pretty well on throughout Friday. So we got a little bounce. But looking at this monthly chart, as you can see, um, uh, we have already on the monthly chart, we already starting to drift below the 50-day moving average. Got a little green candle that's starting to form now, and it's acting like a very strong level of resistance right now. So we got to watch that. So we could see some green action probably sometime throughout October, but that 50-day moving average is going to act as a huge level of resistance even on the monthly chart. Now we'll switch back to a daily chart. Now let's take a look at the VIX, because the VIX also has been telling a story. So here is the VIX. I'm going to erase some of these target lines that I drew for someone else who I was sharing with earlier this morning. And I highlighted a couple of things on the VIX, and you can see it better once I switch over to a 4-hour chart. But I highlighted some gaps, and normally 9 times out of 10, when we have gaps in the market, those gaps normally fill. So this is a daily chart of the VIX, and as you can see, my blue line here is the 50-day. Price action is now above the 50-day moving average on the VIX, and now it's like it's been using that 50-day as an area of support. We had this gap up here around September the 17th. There was a gap up in the VIX, and of course, we normally get those gaps up 9 times out of 10. Gaps fill, and we quickly reverse back down, but not all the way down to this support area, which is this bottom white line. But we travel right back down to the 50-day moving average, meandered down there for I guess a day or two, and went right back above the 50-day. Hit a level of resistance, and we started to drift back downward on Friday. So next week, we could continue to see this VIX continue to drift down. You can see the overall market continue to move high in the near term. But more than likely, this VIX will probably be stopped somewhere just around or just below this 50-day that has been shown to be a strong area of support. Now I'm going to switch to a 4-hour chart here because I want to show these gaps, and I do believe that gaps will continue to be filled, especially with the strong volatility. When you have these gaps up and gaps down in the overall market, even in VIX, normally you're going to see these gaps fill. Here's one that transpired again around the 17th of September. Got a huge gap up in the VIX, and what happened? Price action traded lower after that gap up. Got it as high as 28, and we traded all the way back down just below 20 again, and started finding support right around that 50-day moving average, and we gapped up again. You see that gap, and I kind of like highlighted the gap areas. There was a gap up in the VIX right around here. I want to say that was sometime last week, I believe, or the week before last. There was a gap up in the VIX. There's a little space here, so more than likely, we'll probably see this gap fill sometime next week. So we can see lower prices in the VIX sometime next week, and it'll probably find support somewhere in or below that gap. So that's something to pay close attention to. All right, that is the story on the VIX. Let me look. As a matter of fact, before I switch from the VIX, let's take a look at the VIX weekly chart, so you can see the overall longer-term trajectory of the VIX. We're looking at some of the technical tools that I like to use. Shared this with somebody earlier. Look at this TTM squeeze. For those who use Thinkorswim, the TTM squeeze normally is like a momentum indicator, so to let you know what overall momentum of a particular stock, ETF, whatever you're watching, what the overall momentum is. VIX has been trading down for a while, as we know, since the pandemic, but it found support right around that $14, $15 level, found support. And look at the momentum indicator. It's been getting, the bars have been getting smaller and smaller and smaller on the lower portion below the red dots, and been going from yellow to red to yellow, and bars are getting shorter and shorter and shorter, letting you know that the ultimate swing to the upside is probably still lingering in the background. So the momentum, the VIX overall has been gaining steam to the upside. You see the full stochastics was in oversold territory, and it has also been in an upward trajectory. And our RSI also started to trend up just here recently on the weekly chart. So RSI starting to trend up. Williams percentage is starting to trend a little higher. The full stochastic starting to trend higher, and the TTM squeeze starting to show some longer term momentum to the upside. So that's something to keep in mind, that the overall movement of the VIX is trying to start a longer term uptrend. So something to pay close attention to. Now let's start to take a look at a couple of major indices. So since we're on a weekly time frame, let's take a look at the weekly chart of the S&P 500. And as you can see here, we started a downtrend on the weekly chart. Price has been trending down now for a couple of weeks. And quickly, slowly but surely is heading towards the 50-day moving average. Will we get there? We have to see in time. But if you look at the oscillators within some of the technical tools that I'm using here, and indicators that I'm using here, full stochastics, it's already dipping out of the overbought territory and heading downward. Williams percentage is already dipping out of the overbought territory and heading downward. RSI also dipping out of the overbought territory and heading downward. So with all the indicators pointing to momentum heading downward, over the next several weeks, next several months, we could continue to see overall markets continue to trend downward overall, the longer term, and possibly looking to test the 50-day moving average on the weekly charts. Now let's flip to a daily chart of the S&P real quick. As a matter of fact, let's go to a one-year daily chart of the S&P. Now in the near term, would not be surprised to see a continuation of this rally that we see on Friday. However, now that most of the major moving averages are now trading below the 50-day, this 50-day, which is the blue line again, will normally act as an area of resistance. So with this big bullish candle we had on Friday, we could see this big, we can see the overall S&P continue to trend higher, up just a tad bit, maybe even break just above that 50-day moving average, but it'll probably run into resistance right around that level. And if it does run into resistance again, we can see price action drop and maybe create a lower low than this level here. So that's something to pay close attention to next week. Let's see if we continue to rally, will we reverse by the end of the week and head back down to create a lower low? That's something we need to pay close attention to. So that's our daily and weekly chart of the S&P. Let's take a look at the Dow Jones. Dow Jones, again, similar action. Now we got price action trading below the 50-day moving average again with the big bullish candle on last week. So again, it would not surprise me to see price action head back up towards this 50-day and a continuation of the move that we've seen on Friday, and eventually possibly failing somewhere around that 50-day. If price action does not get a big boost above that 50-day and continue, we could possibly see a rejection at the 50-day moving average once again. And again, the weekly chart here also shows negative divergence all in the oscillators of the full stochastics, Williams percentage, RSI, all trending downward. So is your TTM squeeze, all trending downward. And the Dow Jones, the Dow Jones is very, very close to its 50-day moving average. So we could see the Dow Jones hit that in the near future on the weekly chart. That's the weekly chart again, folks. Now let's take a look at the NASDAQ, infamous NASDAQ composite. Here's our NASDAQ. I think out of all, I think NASDAQ is starting to, it is starting to show this effect a lot sooner. It is really starting to spill over. So the NASDAQ is just, since it made that high of 15,400, it's really just been trending downward on a probably at a quicker pace than the S&P and the Dow Jones. And here too on the weekly chart, we are not far away from that 50-day moving average. And you can see all the oscillators, full stochastic random percentage, and RSI all turning downward. Here's our yearly daily chart. I mean, a 1-year daily chart of the NASDAQ. And again, price action now trading below the 50-day moving average and with a bullish candle on Friday. So would not surprise me to see a rally back up to the 50-day moving average over the coming days or so. So move back up to that 50-day and then somewhere find support and possibly get rejected if we do not break above it in a major fashion. All right. So what I want to do now, here's what I want to do now. I want to take draw you guys' attention to longer term monthly charts of each one of these, because as I've been pointing out before, and I like to show you guys how they are all related to this 50-day moving average. If you notice in history, this blue line, which is 50-day, price action has always stayed very, very tight to that 50-day over time. Look how far we are away from the 50-day now on a monthly. That's a pretty good distance from the 50-day on a monthly. All right. So with that said, we could possibly see, some continuation of this downward trend in the near term. I mean, over the next year or so, with price action looking a little overbought on the longer term charts. RSI still well above the 70 line on the monthly chart. It's still in overbought territory. That is the NASDAQ. What about the Dow Jones monthly chart? Same type of scenario. Our Dow Jones monthly chart is price action is well off of its 50-day moving average. 50-day moving averages, they act as a magnet. Price loves to be drawn to that 50-day. As we can see here with the COVID plunge last year, price action was just off the 50-day, just a hair, and it pulled right back to it and through it and got a nice little rally. And now we're back off the 50-day moving average again on a monthly chart, with price action starting to roll over. That's not good for the bulls. So that's something to pay close attention to. And looking at our S&P, same type of scenario. S&P monthly chart. Definitely showing RSI still in overbought territory with price action well off of the 50-day moving average. Well off the 50-day moving average. So we could continue to see price action drift lower over the coming months or so. So that's something to pay close attention to over time. Now I want to take a look at ETFs themselves in general, so we can take a look at some near-term action. So here is a 4-hour chart of the Qs. Currently, we dropped below the 50-day moving average over the past week or two, and formed some gaps in the market. So I do believe these gaps will continue to be filled. So the volatility will probably be with us for a while, with these wild swings. There was a previous gap before this drop down, which was here. We got a gap down here, and of course the gap was filled back up to the 50-day. We got a gap down here, and what I expect is for that gap to be filled again, and we'll have to see what happens after that. That is the triple Q, so we could see that gap get filled sometime next week. So that's a possibility. Here is the S&P 500. Or should I say the SPY, which is the SPY ETF. Same scenario. There's a small gap here and another gap here. So I just highlighted that entire area where we had a a gap down, and then we fill the gap back up to the 50-day moving average, and we gap down again. Gap down again, and price action traveled all the way down to this level. So what do I expect? It's possibly another run back up to fill that gap, and then we'll have to see what happens after that, if that does occur. Same type of scenario. Or was that the Qs, the SPY, and the diamonds? ETF for the Dow, same type of scenario. There's a gap well above the market. We gap down here just below the 50-day, small gap here. So we could continue to see this rally back up to fill that gap. And then from that point, we could possibly see a rejection. Might not even get to that gap. We may get stopped out right at that 50-day moving average, and then see a move back downward away from that 50-day. So we're going to see how this pans out over the coming week. And one more I forgot to mention is the Russell 2000, which has been, I'm not even going to say a strong suit, because it really hasn't. The Russell 2000 has been really stuck in a range since March, and now my TOS does not want to cooperate. All right. Or did I type it in wrong? I may have typed it in wrong. Oh, my bad. All right, here we go. So here is the Russell. Yearly chart of the Russell. Let's do a 1-year daily chart of the Russell so I can show you guys how the Russell has been behaving. So since March, the Russell is, out of all, has the only one that's really not had broke out to new highs again since then. And since then, we've been in a pretty tight range. The Russell has been in a pretty tight range. So this is the current range the Russell has been in a pretty tight range since March of this year. And we just keep bouncing around that range. But as you can see, the space in between the bounces is getting smaller and smaller and smaller. So with the Russell, we could again see a move back up to the top of this range, and then maybe another reversal back down to the bottom of this range. So we got to see what the Russell's going to do over the next week or so. But if it ever violates and breaks this lower portion of this range, we can see the Russell had steeper moves to the downside. So right now, it's been enjoying being stuck in that tight range, and the range has been getting tighter and tighter and tighter. Here is the IWM. And again, you can see the range. There was a little gap down here, so we could see this move right back up to that gap and possibly come right back down to the bottom of this range. All right, so that is how our overall markets look. And so pretty much that's something that you guys want to pay close attention to, and you know, just food for thought, what's going on overall, and the things that are possibly affecting the overall market, and how it may be with us for a while. Again, major moving averages are already trading below the 50-day moving average. So that's something to keep in mind when we get these rallies. We might not be rallying back to all-time highs in the near term. We continue to fail at the 50 there. So that's something that we need to pay attention to until price action really overtakes those 50 days and are much, much higher. We may be stuck in this huge you know, bout of volatility for a while. And I'll just share a couple positions with you guys that I am still holding as some portfolio protection. So I'm still holding vertical put debit spread within the SPY. This one doesn't expire until November the 19th, 2021. For this one, I bought the 430 strike and sold the 422s against it, and just expecting a profit of about 100%. And if the market continues to trend down between now and November, I'll probably hold a little while longer to see if I can get at least 150% out of that particular spread. Just paid $220 a contract for that particular spread. And again, already shows you where the SPY is now. I do possibly expect a short-term rally, and I do suspect that rally will probably fail. So we right around 434 now. So between now and November, we could probably see prices much lower than 440 and 434. So that is my ultimate thought process. IYR, this one was one that I saw some, well, not even unusual activity. I saw this one was in overbought territory a couple weeks ago. IYR, which is real estate, it's a real estate trust ETF. I saw this one when RSI got overbought. I jumped into a spread with this one, feeling as though it would possibly go the same direction as the overall market. Was trading around 111 when I first took on this particular spread, and as you can see, RSI was well above the 70 line. It was around about 76. So I jumped into a put spread, and it worked out perfectly. It's been trading down since. Now we're back below the 50-day moving average. So I do expect this one probably will also travel back up to that 50-day and possibly get a rejection. So this one I'm actually holding on to see if I can get try to get maximum profit out of this one. It's already up substantially, probably over 100%, but I'm looking for maximum profit since the overall market is heading in the right direction. So we'll see how it pans out, still holding on to that position. This one is a vertical put debit spread, doesn't expire to December. So I got plenty of time to try and get maximum profit if I decide to choose to do so. Bought the 110 strike and sold the 100 strike. Already dropped below 105, so we hit that first target. Now I'm attempting to try to reach the second target of 100. Paid $270 for that contract. We got around 106. I got into another spread of YYR. I'm trying to take advantage of a move possibly to get to that 100 strike area. So I bought another position. Vertical put debit spread doesn't expire until September the 17th. Bought the 105s on this one and sold the 101s. This time I'm targeting a price target, seeing if we can get below 103 prior to the December expiration. EEMs, been trading put spreads and EEMs probably for a while now, and they've been working out pretty well. We got back in on another EEM put spread probably over a week or two ago. This one doesn't expire to December the 17th. Bought the 50 strike put, sold the 45s against it. Seeing if we can target price to the downside of 49 for the first target, second price to the downside of 45. Just paid $80 for this contract. And the Qs, looking for the Qs to be lower between here on December. Bought the 365 strike put, sold the 355s against it. Looking to see if the Qs will drop or trade below 365 between now and December. And the second price target 355, paid 262 for that contract as well. Taking a look at EEM and see where price action is trading now. Just like the rest of the market, still in a longer term downtrend. And don't mind my white lines. These are some trend lines that I drew for myself earlier in the year, just tracking the overall movement. Earlier in the year, we were at 58. Now we are just below $50 a share and trading below the 50-day moving average. So overall, this is still in a longer term downtrend. That's EEM. And one more I'll share with you guys. One that I recently, not recently, but I picked this up a little while ago. After spotting some unusual put option activity on this one, several weeks ago, I saw some unusual put option activity on this one and made me think, longer term position, could we see the overall market really spill between now and January? I'm leaning towards that as a possibility. So I bought some deep out of the money contracts with XLP, and it's been working like a charm so far. This was a vertical put debit spread. And I call these when I get deep out of the money like this, and I'm expecting that the overall market could possibly continue to trend lower. When I go deep out of the money like this, when I got into this one, I'm looking at it as a lottery ticket. If it hits those targets, this will pay off in a big way. If not, I'm only risking $34 to make that bet. So this one expired to January 21st, 2022. Bought the 62 strike put, sold the 52 strike puts against it. Chart targeting 100% profit. And if we get to that level, I'm looking for 150% profit. And where is the XLP trading right now? Let's take a look at that one. Voila, is doing exactly, going exactly as planned. Right now, we just dipped below the 50-day moving average recently. That's on the daily chart, but I've been really focusing on the longer term monthly and the weekly charts, looking for overall direction to see if we can get to my levels between now and January. So overall direction is like the monthly chart shows price action heading downward. If we can get to the 50-day moving average on this monthly chart, that would be a huge win for this particular position that I entered. So that's the ultimate goal. Look at our weekly chart. We are starting to threaten a break below the 50-day moving average, which is a great sign. And one thing I like to point out is when you have price action trending downward like this, no matter what time frame it is, and you have while price action is trending downward, notice volume is this negative volume or downward pressure. The volume is trending higher. Normally, that's a sign that the bears are getting extremely motivated, pushing price down even faster over time. TTM squeeze, as you can see here, trending downward, which is a good sign for this particular position that I put on. Full stochastic is already dipping out of the overbought territory and heading lower. Wins percentage, RSI, you get the point, all pointing lower. So I'm looking to see if that will continue over the coming months and if we can drop below the 50-day on the weekly chart. All right, folks, that is all I have to share with you guys. For you guys who are everyday members, if there's something else that you want to see that I did not share as far as my portfolio, you can always hit me a message in the chat box a little bit later, and I will see if I can get back to you. And for those of you who caught this on one of our YouTube streams, we'd be glad to have you come and check us out. So always, if you'd like to check us out, go to bullishbears.com and you can check us out and see what else we have to offer. We do a lot of things behind the scenes, especially a lot of things within our Discord and on our Twitter feeds for our members. All right, so hopefully you guys got something out of this. I see somebody's typing me a message in Discord, so I'll hold off before I end this session just to see. Okay, awesome. Brian, if you have a question, go ahead and type it, and I am going to end the live. Thank you, sir, as well. Okay, awesome. You're welcome. So I am going to end this live stream for those of you guys who support us on YouTube. Thank you for joining us. And for all those members who are part of the Bullish Bears community, thank you for being part of our community. This is a community where we all come together to learn together. We're not claiming to be gurus, because we're not. Nobody's perfect, but we are all striving to learn how to be successful and navigate this market together. And we do it quite well on a daily basis. We all feed off of each other, and that's what community is all about. Feeding off each other to learn how to navigate whatever the market brings our way. All right, folks, enjoy the rest of your evening. Trading begins again on Monday morning, so hopefully we can be off to a sharp start. If you plan some bullish positions, we may get a nice chance to do some quick swing trades if the market continues to trend the way it is now on Monday and Tuesday. All right, folks, I will catch you guys later and enjoy the rest of your weekend.